Hey, good morning and welcome to the Multifamily Unplugged, the number one Saturday morning radio show, the real estate investors, brokers, property management, and property professionals. Hey, Carl, good morning. How you doing?
Doing great, Mike. How are you?
I am great today. It's good to be alive. Great Saturday morning in Chicago.
Yep.
Hey, this is where we dive into raw, unscripted conversation about multifamily and real estate, about property management and current events, and what effect all that has on your business, whether you're an investor or whether you are a property manager. Hey, two topics that really deserve some no fluff, in depth conversation, straight factual data that you can start to run off with. And that's just conversation around multifamily, what to expect, and how to build your business. Hey, I'm Mike Morowski, joined by my co host this morning, Carl Moose, and we provide raw, unscripted conversation. It becomes spontaneous and real. That's how a real that's how a real estate business works. It's spontaneous most of the time. You need to think fast on your feet. So how do we get there? Well, we get there by being engaged in the conversation. That's just what we provide every week for you. My co-host and I, who we call Moose, have over 50 years of experience, and we bring that to you. So grab your coffee, sit back, and enjoy the ride. Hey, once again, today's show is brought to you by the Multifamily Global Summit, where next week on October 15th through the 17th, you can join us for 3 days of networking, education, and fun, where we're going to be joined by 20 of the top national multifamily real estate investment specialists, bringing you tips and tricks to grow your real estate business, investment and management business. So right now, go to multifamilyglobalsummit.com and register for this event. And listen, if you need a little extra incentive, put my last name or Moose's last name in, and you will receive a 20% discount. So if that's that last thing that you're waiting to push you over the edge, go take care of that now. Hey, no guests today, Carl. How's that?
What?
No guests
I
today.
know, I know.
Just me and you, buddy.
Well, it's good
Hey,
we have multiple personalities, Mike, so we can,
that's right. We're going to tear them up today, Carl.
yeah. Well, hey, listen, man, I really want to take my hat off to you. You've done a great job bringing in all the speakers, and I know that's kept you busy. So, it's we don't have a guest today because we got 20 great speakers next weekend. Which, by the way, obviously we're not going to be broadcasting multifamily unplugged next week because Saturday will be day 3 of that event. So, you know, plug into that, and you're gonna, if you like this show, plug into the Multifamily Global Summit because that's gonna be incredible. So,
Yeah,
yeah,
but here's what I can tell you. The following week, the 24th, we got a good guest going to
yeah.
be on.
Who's that gonna be, Joe?
Guy up out of New York who is a real estate investor, multifamily syndicator, and it'll be really good for him to be on because we'll recap what happened over the 3 days at the summit. So it'll be a good show that week too.
Yep, awesome. So what are we gonna? It's interesting. Look, I'm wearing my Fields insurance thing. For those some of you that don't know, I'm in the insurance business. I know that's one of the topics that we're gonna talk about today, right? There are some current events, Mike.
Yeah, a little bit in current events, but here, listen to this. So you know what today is? Today's a big anniversary for me, right?
For
I
you?
Yeah. So 10 years ago today on 10-10-10, I ran the Chicago Marathon for the first time.
You did
And
it
you know
10
what's
years ago?
cool? In April that year, I had knee surgery. So I had my knee scoped and I ran it in October. So I healed up pretty good. But 10-10-10, and then today's 10-10-20. How about that, though?
Oh, that's funny. Listen, yeah, I have a friend. That's awesome, by the way. I have a friend. He's from Ethiopia, and this guy's run, I think, 19 marathons, and he's every
Oh.
year he's like, "Come on, Moose." I'm like, dude, I'm not running with you. There's no way I'm running 27 miles. So,
You should run it though. My daughter sent me the picture this morning on Facebook about that, and her husband wrote a little note that said, "Next year I'm in."
yeah, that's
So
awesome.
come on, Trey, if you're listening this morning.
Yeah. Yeah, that's something I couldn't do. My knees would my knees would give out if I tried to do that.
Yeah.
So wait, what's new? What's new in the news?
All right. So here's a big thing. Professional burnout is on the rise. They are saying because so many people are working at home because of COVID, and that there's no break in their life. There's no break in their schedule, right? So people are getting up, rolling out of bed in their underwear, getting in front of their computer, working all day long. This is what I say: if you're going to the summit, man, why go to a hotel and sit in a group of 5,000 people when you could sit at home in your pajamas and just
Yeah.
listen for 3 days? Hey, so professional burnouts on the rise, right? We've got people that are just going to work, rolling right out of bed, going to work, grabbing their coffee, sitting at the computer all day, and hitting the wall late at night, going back to bed. And this is pretty. Seems to be a big thing for a lot of people these days. So by not going back to the office, not going back to work, people are overworking themselves. You know, and Carl, I just want to say I think this is a big issue for people is the overworking, the time balance. You know, what happens to your quality of life when you do that? When you work like that and you get to a point where you just go, go, go and you hit the wall and you don't take any time, whatever happened to the Sabbath, you
Yeah.
know? So, I think people really need to take a look at that. One of the things that I talk to people about in my coaching program is time balance. I
Yeah.
think it's really, really important that people look out for how much time they put in and what goes on in their life, you
Yeah, I
know?
could agree with you more. And a lot of times entrepreneurs, people don't realize that and you've done it, I've done it, work from home, work from an office, and it's not easy. People think, oh, this is going to be great, I can do this. But you're exactly right. What it does is there's no separation between your professional life and your personal life. And it's not easy to do. I mean, a lot of people that think working from home is going to be a piece of cake and you're going to be efficient. You almost have to be more disciplined, right? And say, I'm only going to work between these hours, and then I'm going to go take a walk, or I'm going to go, whatever. You know what I mean? And listen, I fell into that trap. I remember there'd be sometimes I'd go for 2 or 3 days. I'm embarrassed to say I'd go for 2 or 3 days without leaving the house. I wouldn't take care of myself. I wouldn't shave, and it's you really have to have discipline when you do that. And for a lot of people, they've been forced into this situation, right, because of this crazy global thing that's going on, with the shutdowns and all that stuff. Some people, it's not by choice; it's by default.
Right.
And I could see where people burn out. What's the silver lining? I think a lot of people, Mike, are going to say, you know what? I'm done with the 9 to 5. I'm done with people telling me what I have to do, how I earn a living. And real estate is one outlet. One of the things I love about real estate, and I know you can appreciate this, Mike. You know, nobody ever, if you can come to a closing and you can buy a piece of property, no one's ever asked me, where did you go to college? What kind of degree do you have? What fraternity are you in? They don't care. Nobody cares about any of that. What's my point? My point is anybody can do real estate. If you're, it doesn't matter where you came from. If you can close on a deal, you can get into real estate. Nobody cares. And so for a lot of people, that's why real estate is such a great outlet, because you can design your future and live into it with the right guidance and the right direction. I think that's one of the great things, especially small multifamily, two to
Yeah.
four to six flats.
Hey, so let me ask you a question. So what's the solution? So if the problem or the issue is, overworking, time balance, working from home, and it new to you. So what's the solution? How do you resolve the issue?
Well, I think part of it is how you got into this situation. It's by default. That's part of the problem. I think no matter in any area of your life, whether it's your relationships, your business, your finances, whatever, when you're operating out of default, in other words, a lot of people are forced to now work at home, right? This wasn't a choice. They didn't do it by design. So I think that's one of the big issues. And I think one of the ways to work your way out of that is to design something, right? I mean, to come up with your own design and say, you know, if it's, if you're not happy with your situation, you have the power to design a new situation. You have the power to build a new future. And a lot of people don't realize that. A lot of people just they go along and they're, they don't realize that they actually have a say in what they do. Now, that doesn't mean that they can, I don't suggest you just, if you just quit your job tomorrow and start looking at buying real estate. Part of that design is a transition, a transition. When you make a decision to say, I'm not going to do this for the rest of my life, it may take you a year to transition out of that while you're starting to build momentum or starting to educate yourself or starting to build your network, for real estate, because that's what we're talking about here on the show, right?
Yeah,
Multifamily
yeah,
real estate. So, I don't never suggest anybody just quit your job cold unless you got a year's worth of salary, in the bank, and you can do that, but again, to answer your question, I think a lot of people are operating out of default and not out of design.
yeah. I would agree. I'd agree. And I think that a lot of times we can't straighten those challenges or situations out all by ourselves. We need to have a sounding board. So whether it's your spouse or whether it's a business partner or a coach, get a coach and have somebody to talk to, give you some guidance and direction.
Yeah.
You know.
And if
So
I just on top of that, Mike, it's accountability. It's accountability. Listen, I have coaches. I know you have coaches, right? Or guides or people that you bounce stuff off of, right?
right.
Think about, hey, we just talked about the marathon, right? Well, some of those marathon runners are professional marathon runners. They have coaches. They have nutrition
Yeah.
coaches, they have workout coaches, they have stretching coaches, right? Olympic athletes, professional athletes, actors, people understand when you reach a certain level and you want to go to the next level, whatever game you're playing, having that sounding board, having that accountability person, having that coach or guide is so critical because you're not going to do it on your own. You're going to
Yeah.
hit a glass ceiling.
Yeah. And listen, I don't, as much as I'd like to, I don't want to turn this into a sales deal for coaching, but coaching is important. I've been coached for 25 years in my life. I remember when I first wrote that first check 25 years ago for $1,000 for 1 month of coaching, right? And I went to I have to be crazy. And my wife thought I was even crazier, right? But listen, I walked that for 25 years, $1,000 a month, one-on-one coaching, and I equate that coaching and the different coaches throughout my life for an annual increase in my business of 20% a year.
Probably, yeah.
I mean, when you start to look at your production growing 20% a year, I want you to just stop and think about this for a minute. What happened to you personally along the way? You think you grew personally at all? Of course you did.
Yeah.
So you don't just grow. It's not just a business deal, but it's a personal and a professional type growth that you get as a result of it.
Yeah, and I think it's an investment. I mean, someone told me a long time ago, you can either save money, um, or you can save time. What's more valuable to you, time or money? Well, time is more valuable. You can always go out and earn more money. So,
Right.
it's either you invest money to save time or you invest time doing it on your own in an attempt to save money. However, when you really look at it, you're so much better investing a little bit of money to save you time because time is your most valuable asset. And that's, every time I looked at a coaching program, that kept running in my mind. Can I do this on my own? Yeah, sure I can. Listen, we hired a whole team of people for social media, right, for this multifamily global summit. Mike, you and I could have tried to do that on our own and stumble through it, or right, or we just say no. Here's we're gonna hire professionals and they're gonna help us with it, right? I mean, so
Right.
that's really the way you look at it. It's an investment in your own, whether it's your coaching program or my coaching program, or whether they invest the $90 and go to the the multifamily global summit, whatever it is you do, that investment of money is going to save you time, and that's the key.
Yeah. So listen, you bring up kind of a good thought. I mean, listen, when you don't know how to do something, go find somebody to help you do something. One of the moving parts in this, putting this whole thing together, has been the communication between the website and the database, right? And all of that type of stuff. We went and hired somebody from Portugal, Anna, who is from the Ukraine. She lives in Portugal, and she is a wizard when it comes to Zoho, which is the platform that we use. So she's gotten all of these systems to talk to each other. Listen, it would have taken our the lead on our marketing team, Joel, okay, Virtue Creative, uh, a whole bunch of time that would have taken away time from him developing some of the other strategies that we've worked on over the
Yeah.
last few months.
Yeah.
But when you look at it, we had her, we had Zach and Heather working on video, Carol working on um, social media, Joel leading the marketing charge, right? And Virtue Creative. Hey, listen, it, you and I trying to put this together ourselves would have never happened. I
No,
mean,
it wouldn't have.
and I remember when we first started talking about this, I said, man, there's so much to do. We don't, and you said, hey, we'll figure it out along the way. And you were somewhat right, which is okay, but it just, it hasn't been the easiest thing, but you know what? It's certainly been worthwhile. And I think that come next Thursday when we kick this thing off, or Wednesday night for the VIPs next week, that people are going to really see how much effort, time we put into this, and have some great results by the time Saturday rolls around.
Yeah, yeah, and listen, multifamily. You and I both say it, Mike. Like most people, we started with one property, right? You started with one property. I started with one property. For those of you that own property out there, you know what I'm talking about. For those of you that never bought a small multifamily, just know that you're in the same place that Mike and I were years ago, right? You're looking at buying your first property. But here's the difference. I didn't have a Mike Morawski to help me, right? I didn't have even someone like myself to help me. Even if I would have, even if they would have shown me one thing in writing the contract or negotiating credits or how to get the bank to pay for the appraisal, I would have saved thousands and thousands of dollars on that first property. I mean, I'm talking about tens of thousands of dollars on that first property. So, and did I figure it out in the long run? Yeah, but it really took me until about my third property to really understand the dynamics. So just, and these were not small properties. I think the first one was an 18 unit. I think that was like a $1.8 million deal. The next one I think was a 10 unit building. The next one I think was a 27 unit building, if I remember correctly. So I
Right.
made mistakes looking back, and I'm like, geez, I mean, I literally probably lost 50 grand, on those three deals just at the closing table because
Right.
I didn't have somebody to walk me through it. You know what I mean? And here's what I always tell people: listen, you know, you're gonna make mistakes. However, there's a whole bunch of mistakes that you don't have to make, and you can, if you had somebody, an accountability partner, or somebody that knew that already been down that path, they're going to show you where the black holes are, the red flags and the pitfalls. I use the analogy of walking through the jungle for the first time. If you've got a guide or somebody that's been down that path, even just once before, you're going to be better off by, following them, especially if it's someone that's been down the path 100 times. I mean, they're going to show you exactly where to step, where not to step, where to, you know what I mean? And that's so true. And we've got 20 people coming next week, and that I'm looking forward to it because I'm going to listen to every presentation. They're all recorded, and I'm going to learn some things I probably didn't know before.
You meant 20 speakers at the event.
Yeah, what I say, 20 speakers. Yeah.
You said 20 people coming, but yeah, I think you meant speakers at the
Yes.
event. Yes.
Yes. 20
Hey,
speakers.
listen, you know what I always say, right? Success leaves clues.
Yeah.
So if you follow somebody who's been successful, and I tell that story about how I got into real estate, hey, I didn't know anybody, I didn't know anything about residential real estate or selling real estate. And I went to a guy in my neighborhood, or not my neighborhood, but in the area, who was really successful. And I asked him if I could shadow him. And I asked him, this is long before coaching was fashionable, right? Coaching, nobody even talked about coaching. You went to therapy back then, right? This is not therapy. So, but I went to Todd and I said, hey, can you help me? I said, I'd like to shadow you, hang around, see what you do. He goes, I'll do better than that. I'll make you a cassette tape. and he made me a cassette tape. I listened to it over and over and over again. Now I say that because next week, if you're a VIP, you're going to get all the tapes, all the recordings, 20 some hours worth of material that you can listen to on the treadmill while you're driving the forklift at work, while you're at work, while you're on the way to work or on your way home. You can take time and listen to this stuff over and over again because repetition builds reinforcement. And once you master the techniques and the systems, you're off and running.
Yeah, and you know what the other thing is that it's very important is, and I know you're big on this network. We're not only building, we're not only providing education, it's also building a network and a
Right.
community. And I think that's really important because I remember when I worked with Bob Proctor, right? It was a year-long program. It was six figures. It was very expensive. And one of the things that pushed me over the edge was I saw the other people that I was going to be hanging around with for a year. There were 22 of us, people from all over the world. And I realized if I can write a check this big, all the other people in the community, that small community that he created, could also write a check. And I thought to myself, what value does that have to be networking with people? And it ended up, we got probably 7 or 8 of those people to do real estate deals with us, right? And so
Right.
it was that community. We developed relationships, and all of a sudden, these were doctors and lawyers and trust fund, people that didn't know anything about real estate. They wanted to get into real estate, and so we we partnered together. And what's my point? My point is, it was out of that community, out of that network, there came some real benefits because of the networking. So, but let's talk about the insurance for a minute, because I know, if you're in real multifamily, that's something that's always a concern is, the insurance. And so
So,
before,
so here's one of the other headlines, right?
yeah,
And this one is apartment owners face rising insurance rates. Property and liability coverage costs have gone up for landlords. Why is that, Carl? You're in the insurance business.
well, it's interesting because the insurance business is, I think, the second largest business in the world outside of energy. So the insurance companies, they take a look at trends. They take a look at, trends going back 6 months, 12 months, 18 months, and they look at, how do they earn their money or their income, right? They take in premiums and then they pay out on claims and losses, right? So they take a look at that and they analyze that. And there's a lot of science that goes, into that. And for whatever reason, they're predicting that they're going to have more claims, so their insurance rates are going up. Now that's the bad news. Here's the good news about insurance. My suggestion is always, keep an eye on your insurance. Most people that I deal with, right? They all they do is every year they just renew their insurance. They don't go back and they don't analyze it. They don't look at the clauses, right? They don't negotiate with their insurance company, and they should, right? Because the insurance company, there's a lot of insurance companies out there. So, you can always go to them and say, listen, if you don't do better on these premiums, or, take a look at renewing my policy based on my performance, based on the fact that I haven't made any claims, they have the ability to lower your premiums, right? And if you don't, they're not going to come to you and say, hey, by the way, Mike, thanks for, you start off with one building, now you got 20 buildings. Thanks for those premiums every month. By the way, we're going to give you a 10% discount. No. So negotiate with your insurance company, especially if you're growing your portfolio, right? And you have the same insurance agent or broker. Negotiate with them because they have the flexibility to improve your premiums. And remember, a big chunk of the premiums is actually your broker's commissions.
Right. So one of the things that's interesting, right, is that when I was actively investing, we were able to go to a broker who then turned around and went and crafted a great program with um, Lloyd's of London and Nationwide, and they both took a portion of the risk on all of our stuff, right? So I knew walking in the door when I was evaluating a deal, when I was doing the due diligence or even the initial evaluation, I knew I could figure $195 per door, right? That was my insurance cost. But then there were some add-ons. Like if I had a diving board on a swimming pool or a deep end on the swimming pool, that gave me an add-on. If there was a tennis court, that gave me an add-on. You know, if there was, there were some parking restrictions and things like that. Balconies, outdoor balconies, and then if it went up high, higher than 3 stories, there was an add-on. So, different things gave you add-ons, but I knew out of pocket I would be about $195 a door, right? And those add-ons were never that much. Maybe took me to two and a quarter a door. So if you really want to be able to do your due diligence and figure things out, and you've got a good program with your insurance carrier, you can lock it in.
Yeah.
And there were the times that they tried to raise those rates, and we went back and said, hey, look, you see where we're going, you see what we've done. Why would you want to raise those rates on us? Plus, here's the other thing, right? The offside is the renter's insurance. So now when you have your tenants having renter's insurance, that helps keep the building insurance down. Insurance is a funny thing with apartments, right?
Yeah.
Tenants,
So talk
tenant,
about that, Mike. Mike,
yeah.
talk about that for a moment. So talk about the renter's insurance. So how can you, as a landlord, and I know the answer, but I want to hear from you. It's so our listeners can hear. How can you not force, but how can you require tenants to have renter's insurance?
You highly suggest. You don't really, it's you can be required by your insurance company to have all your tenants have insurance, right? And listen, if you don't want to pay, Carl, I can just add it into your lease.
Right. So
Hey, listen, renter's insurance is $10 or $12 a month.
exactly. So
Even
this
if
is
you
what we
don't
were.
live in a place that has renter's insurance, you should have renter's insurance. Here's why. If the building blows down, burns up, or floods, your stuff's not protected on the owner's policy.
Right.
It's just not.
Yeah,
You,
and so that's what we used to do. We used to highly suggest it, and if people didn't want to do it, we would offer them, say, listen, it's a $12 premium. We're going to add $12 to your rent every month, and we'll sign you up for insurance, because exactly right. See, a lot of renters think that the property owner's policy will cover their stuff, and it doesn't. Absolutely
right,
not.
right.
Listen, I'm wearing my field shirt because they're also a sponsor that we're working with, and I work with these guys. They're adjusters, public adjusters, and I use them to manage 2 fires I had at 2 big properties, and all the tenant stuff went up in flames. If they didn't have renter's insurance, they would have tried to come after us, and I said, it's not covered, plain and simple. It's not. There's nothing I could do for the renters. Zero. It's not in the policy. So even if I wanted to, I couldn't. So how do I protect myself and protect my tenants? You're actually doing them a service. If they don't want to go through the hassle of doing it, it's a little bit of you have to jump through a couple of hoops yourself, but you go right to your agent and say, listen, I got 20 tenants over here. I want you to give me a good deal on renters insurance, because then he's writing 20 new policies, right? So that's good for him.
Right.
So it's definitely, if you're a property owner, you should absolutely either require, highly suggest, or roll it right into the rent and just tell them you're going to add $10 or $12 to the rent.
Yeah.
It's definitely worth
Add $15 a month to the rent and put the insurance in there, and the other couple of dollars that you make helps cover the cost of the paperwork that you fill out. Listen, if you have all your tenants, if you 100% of your units are covered by their own renter's insurance, it really decreases your cost as an owner on your property insurance.
it.
And
Absolutely.
listen, as a property owner, you have to be about, how do I increase my bottom line, right? You're not going to make money on the insurance, but if you can decrease the insurance cost that you pay, $5, $10 a door, man, that starts to add to the bottom line. So, there's 2 ways to make money in business, right? Just business in general. You can increase revenue, decrease expenses. But when you do both, now you have a great marriage, right?
Yeah. Right. And the other thing, absolutely. The other thing I run into all the time, because I do help people when they do have a disaster, a flood, a fire, or something like that. A lot of people don't want to make a claim, or they don't want to use a public adjuster. And that is a huge mistake. And, I use the analogy of, if you ever walk into court, if you were indicted on a federal, crime, you wouldn't go to federal court without an attorney. why would you do that? Why would you fight an insurance claim on your own? Because I guarantee you this, you always leave money on the table. When the
Right.
insurance company makes you an offer on a claim, it is not a high ball offer, it's a low ball offer. So a lot of times people say, oh, well, I've been with this insurance company for 20 years and I don't want to, I don't want to screw them over. And I look at them, I say, are you out of your mind? That's when they owe you. If you have a claim, a major claim on your building from fire, flood, hurricane, whatever, don't hesitate to capitalize on that insurance policy, because think of it like an investment. Every month you've been paying your investment, right? And when that investment comes due, it's time for you to collect. I use the analogy: if you were buying IBM stock, or you were buying a stock in a company, every month you were paying and buying a little bit of stock, and then something happens in that company where there's an event where you could collect on your investment, you're going to collect on that investment. Well, it's the same thing with an insurance claim. You've been paying every month those premiums, and if you have a major fire or a major flood or something, you want to collect every penny that you're owed. And the only way to do that, in my mind, is to work with a public adjuster who's
Yeah.
going to come in and they're going to get you every penny you deserve. Otherwise, you're leaving money on the table.
Right. Yeah. So I think a lot of people don't understand that or know about a public adjuster. I don't know that I did when I, first went in the real estate business.
Well,
And
yeah, I mean, I'll tell you a real quick funny story. The company I work with now, Fields, this is the shirt I'm wearing. It's a father and son team. They've been around since 1974. Well, the son, Sam Fields, played professional hockey, and that's how I know him. I know him from playing hockey. Well, the day I had the fire, it was a 27 unit building. I get a phone call from, I'm literally at the building, right? The fire department's there. It's chaos, total chaos. It's in the middle of February or beginning of February. My tenants are literally on the street because the building burned. The Red Cross is there. I get a phone call from my friend Sam Fields. He goes, "Hey, Moose, I heard your building caught on fire." I said, "Yeah, how did you know? How'd you hear about that?" Right? He said, "Well, that's the business I'm in." I'm like, "What? You're in the business of lighting buildings on fire?" I didn't know you. He said, "No." He said, "We help property owners." I knew this guy for 4 years. I played hockey with him. I had no idea what he did for a living, right? So because I had a relationship with him, I trusted him, and I said, "Fine, what do I need to do?" He said, "Show up at the office." This was on a Sunday. He said, "Come to the office tomorrow." He said, "Bring your insurance policy, all the information you have on the building." To make a long story short, Sam and his father took the claim, and I didn't do anything. They handled the whole thing from soup to nuts. They got me another $90,000 on my claim. My claim went from 170, which was the original offer from the insurance company, to 280,000, or no, I'm sorry, 180 to 270. So they got me another $90,000 because they know how to adjust the claim. I had no clue, right? So it was absolutely worth the effort. And now I help them, promote their business, because Mike, I'd never heard of an adjuster either. I would have got screwed.
yep.
I would have totally got screwed.
So let's go on here a little bit. Um, I want to talk about something. I think that people have a philosophy in real estate that they have to time the market, or that they have to buy when the market is down. That's the best time to buy, right? I really believe that it makes no difference in the real estate business if the market's up or the market's down. If it's a seller's market or it's a buyer's market, buy real estate. It doesn't matter who the president is. It doesn't matter who the president was. It doesn't matter where the market's at, because you can always make money in real estate. Okay. It's an independent deal niche, right? But here I bring this up because here's a company, um, Morgan Properties. It, you know, most people probably have never heard of them. They are a big syndicator, and they're the nation's fifth largest apartment owner. They're the fifth largest apartment owner. So that's up against the Gray Stars and the Blackstones and the people that are really loud, right? Morgan Properties is a multifamily operator, and they just acquired 3,200 more units in California. Now I bring this up because last year Graystar went and bought and acquired 25,000 additional units. So, and they're number two in the country. Blackstone's first, Greystar's next, right? Um, but it's interesting how the big guys are going out and they're still buying big deals. So deals are trading, right? People say, "Oh, I can't find anything. There's nothing on the market." Deals are trading, and it's a matter of what your criteria is, what your buying standards are, and how you're executing those.
Yeah.
And in order to trade those deals, I just found it interesting that the bigger players are buying big portfolios still.
Yeah. Yeah. And listen, I didn't play at the same level you did, Mike. I never got to buying, big uh, deals like you did. And it came to a point. I can tell you why. It came to a point after about 7 years where we had to make a decision. We had about 750 tenants at that point. We had to make a decision. Are we going to start our own management company? Are we going to take this to the next level and start buying 100-unit, 200-unit, 300-unit buildings? Right? I never crossed that barrier because there were some things happening in my personal life, because I knew that was us taking the business to the next level. You know what I mean?
Right.
We were buying a couple buildings a year, and they were averaging about 20 units or 25 units. So again, I think it really is important for people to take a look at and say, where do I want to take this business? Do I want to do this as a hobby and just buy a building here, buy a building there? That's okay. There's nothing wrong with that. Or do I really want to build this out as a business, right? And I couldn't agree with you more. It doesn't really matter with real estate, especially multifamily, because people are always going to need apartments to live in, right? They're always going to need apartments to live in. So regardless of what's going on in Washington, in my mind, it has very little effect on what's happening locally, because real estate is a hyper local business. In Chicago, for example, if you're buying a property in Lincoln Park, which is on the north side by DePaul, and it's a very hot area, versus Washington Park, which is on the south side, same assets, same type of building. As a matter of fact, if you saw pictures of them, you couldn't tell which is which. They were built by the same guys or same people, right? But the rental income and it's just a different dynamic, and that's just 5 miles away from each other, right? You buy a different cap rate in Lincoln Park than you do in Washington Park, right? And so what's going on in Washington has very little to do with what's going on in Lincoln Park or Washington. So that's really good news, that when you find a local market that you want to focus on and you really get good at that market and understanding how to analyze the property, understanding what the renters are looking for, you can really do well.
Yeah.
And these big boys, these institutional guys, like you mentioned, whose properties are they buying? Well, they're probably buying 1,000-unit, maybe somebody that built 1,000-unit portfolio in Cincinnati, or someone that built a 2,000-unit portfolio in San Diego, and they're cashing out for 10, 20 million, when these big companies are scooping them up. Well, that's absolutely possible.
Yeah, no, I agree. And here's the last one I wanted to just chat about, and we're getting close to time here, but here's why people are buying, right? Apartment companies find Gen Z willing to trade data, privacy for enhanced services. So these younger tenants are willing to trade their data for more services. So what is happening is they're going in, they're signing their leases in these big deals or big complexes for renters, and they are saying, okay, yeah, you could share my data or you could sell my data, and as a result of that, I want more services. So they're getting more ancillary services. They're getting free, internet, free data, free business center use, free uh, um, um, swimming pools and laundry services and things like that. So they're giving them all these additional services for allowing them to sell their data, which is interesting because I never wanted my data sold. You know how you go to the store and they say, "Hey, what's your phone number?" I go, "What's yours?"
Yeah.
So, but I just found that interesting because, hey, go buy something because you're going to find tenants. one thing that we always have is we always have renters in this country, right?
Yeah.
So
Well, and why is that?
why is that? People
Yeah.
need a place to live. Listen, when I was a kid growing up, my dad said, if you ever go into business for yourself, go into something that's food, shelter, or clothing. I've been in shelter my whole life and it's never failed me.
Yeah.
People
Well, and
need,
yeah, I mean, that's right. I mean, think about it. I mean, you go, if you go to college, right? You rent something. Usually you live in a dorm for a first year or two, then you rent an apartment, right? Or if you
right,
go into the military and you get off the base, most people don't buy the home, and they're talking about that. Homeowners are now getting pushed older and older and older. So, people aren't buying a home. My parents bought their home, which they still live in, by the way, 65 years later, when they were in their 20s. Now people are waiting till their late 20s, early 30s to buy homes. So where are they living? Well, if they're not living in mom and dad's basement, they're living in an apartment, right?
right.
And that's an opportunity. Listen, a friend of mine, you ready for this? A friend of mine, his daughter went to University of Illinois. Instead of paying, uh, instead of paying for, the premium for student housing, he bought a three flat. He
Sure.
bought a three flat, had her live in it. She rented it out. Not only was it a good investment on his part, but she got into property management because she was responsible for collecting the rent and renting it to the other two people. 4 years later, he turned around and sold it. Not only did he make all his money back, he made a profit of $25,000. And in the meantime, he had all the tax write-offs and everything else. And that's just one example. The guy was an accountant. He was like, why am I going to pay out this money when I could pay my mortgage and collect it on the back end? I thought that was brilliant.
Yeah.
So
Well, that just goes to show you that you can make money in real estate. It's a
yeah,
great example, right?
yeah,
Hey, we need to wind this thing down this morning. So listen, here's what I want to say. First of all, thanks to our sponsors today, Fields Insurance, Fields Loss Consultants. And if you have a insurance claim or you need some help, give Moose a call and or send him an email. And the Multifamily Global Summit. So here's what I just want to urge our listeners. If you have not registered for the event coming up next week, go register. Use mine or Moose's name and get a 20% discount. But you know what? If you are serious about multifamily, whether you are serious about ownership or operations, you need to be there because you're going to get knowledge and information. In the chat is the website address, some little bit of data. Copy that for yourself. Go register and be there, and we will have a great time. And Wednesday night is the VIP reception. Won't be long. It'll just be kind of a welcome deal. So bring your own champagne, and we will see you next week, right, Carl?
yeah. And I put my name in there, Mike, only because it might be easier for people to remember. It's easier to spell, but you can use Mike's last name or my last name.
Right.
You'll get a 20% off the all access VIP pass, which we priced at $90. And again, back to an investment, Mike. I mean, I think that's going to be the best investment. If you don't make any other investment in real estate and your business this year, because the year's almost over, we're in the fourth quarter. Invest $90. You won't regret it. And I'm not just saying that because it's our event. It's going to be a really great event. That's all I know.
Yeah, it'll be fun too. We're gonna have a lot of fun and play cash flow. Listen, go play cash flow. Robert Kiyosaki built $1 billion empire off of that game, and it is fun to play. And here, strategy, right? We all want to know some more strategy. We all want to learn a little bit more. Hey, cash flow is going to help you do that. It's going to teach you investment strategy. It's going to teach you how to buy, how to sell, and what happens along the way. So,
And that's one of the breakout rooms for the VIPs, right? We're going to have
right.
um, we're going to have an individual that knows how to run that game, actually run a game during the event.
Right, right.
Awesome.
On Friday and Saturday. So, all right, everybody. Hey, Carl, good seeing you this morning. Nice and energetic as usual. So,
So, Mike, let me ask you a quick question. You're going to go run today?
no, I'm. Nice try though. That was good. That was 10 years ago, Carl.
Your
Go to
10-year
Facebook.
anniversary?
Go to Facebook. You'll be able to see that picture.
Yeah,
Hey,
just go run around the block once.
yeah. Hey, I'm gonna go get some pumpkins and go see my kids and paint pumpkins with my kids today. What are you gonna do?
Yeah, I'm going up to see my kids too, so I'm not sure what they got planned, but they're teenagers, so they've always got something going on.
Yeah. All right, buddy. Have a great weekend, and we will talk to you soon. Bye, everybody. Thanks for being here. And remember, we will not be here next Saturday. We'll be at the Multifamily Global Summit. However, we will see you the following week.
Thanks, guys.